And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It's bright, it's beautiful. It is Friday afternoon, and I hope you all have a happy Memorial Day weekend. Let's jump into the charts, the underlying market dynamics, look at some price targets on Bitcoin. Are we bullish? Are we bearish? And I will give away my cards here shortly, hopping into open interest at 8.19 billion. So pretty much the same as yesterday. Funding rate slightly positive, so you're paying to go long. And the crypto fear and greed index coming in at a 49, still at a neutral level, showing that perhaps the selling is not done. What I would want to see is open interest kind of shaved down for price action to continue to go down if open interest starts to tick up. And specifically, well, this is CME's weekly close. Let's take a look at the weekly, a indecision candle, but getting kicked out of the bullish control zone, out of the critical zone there, and putting in a few drives of bearish divergence. Very strong drives, 1, 2, 3 drive. Well, call it the 2 drive variety, which technically gives you that shot to the 21. You might be able to call this 3, which is a shot to the bottom side of the range, which would be kind of in this zone right here. But I think there's a lot to contend with at 24.8. And if you look at the bottom side of this wick, we did get down to 25.8 here. So also there is a gap, big old gap down here at 20,000 bucks. Economic data that came out today, CP lie day, as we like to call it, was pretty bullish news for the dollar. Core PCE inflation came in at 4%, higher than expected. Personal spending was up almost double from the consensus or the expectation. Personal income flat. Durable goods came down. And the other one, Michigan consumer expectations. So inflation expectations did rise. And as a result, the dollar did smoke to the upside and actually hit our target. I do want to review a couple of targets we've had this past week and just follow up on those briefly. On the daily time frame, I think it's a little bit easier to see. But from the wick to wick, we're coming in we cleared the 618. And the next target should be right here. Overall bullish on the dollar, looks like continuation going into next week. As low liquidity is suspected by the markets, I do believe there is going to be a bit of a flight to the dollar, and gold is coming down to its target, plays inversely to Bitcoin. Close enough is close enough. If you remember, we called this one way up here at about 2,000 bucks and said likely the measure move off of this thing is going to be, at 1923, but I said, hey, probably 1930. Also, NASDAQ, which is carrying the entire market, did hit our target to the T, it looks like. Which is going to be that 618 fib. So the question is, this euphoria about AI and NVIDIA going to carry the entire market up with us? Pretty bullish, but that's where you expect the bull traps to get set in. And I do imagine some people are going to be taking profits off of this level. However, if there is some kind of news coming into next week that we do have a deal on the debt ceiling, that could provide for a little bit more pump. But again, my thesis is this is the pump right before the dump. All the overall economic factors say that, stocks are going to come down at some point this year, and they're going to come down hard. Let's see what else. Just peeking at the S&P, did break above this level, kind of looking at a next target of 42.57. with some potential for more. Still kind of in a massive range going back from these highs back here. And we haven't confirmed any divergences yet, but you would have some coming back from these highs over here. So not much to report there, just kind of parabolic, euphoria in the stock market. Retail trading is quite heavy. And, that is the recipe for a nice little bull trap. Where do the bull traps come in? Again, right at that 618 fib, which is a bit higher overall for the S&P, actually right up here. So it looks like, that is probably the next target overall going into next week. The weekly did close bullish as well. Lastly, the Dow Jones having the worst of the results so far, and this one does look droopy, but a rising tide carries all ships. So NASDAQ, I do believe, is carrying the bounce on Bitcoin. And oddly enough, as the dollar's been skyrocketing this week, NASDAQ put in a party rally. And this is the guy, the dollar rules the entire market, king dollar. Whatever the dollar does, I would expect that trend to remain the same, which is dollar go up, typically not the best thing for risk assets. Dollar go down, well, risk assets have a chance to have a bit of a relief rally. Okay, checking in on Bitcoin, as I know everybody kind of, still catching the flack about the $25,000 target, which is this purple 200 exponential. And what did we talk about yesterday on the 4-hour time frame? In fact, I did say this, that, hey, look, if we confirmed any kind of a 4-hour closure back above this level, well, that should give us a shot at least to the 21. We got up to the green 55. Why was that? Well, we had several drives. Actually, I said green 55. I did say that. Why? We had 3 drives of hidden bullish divergence coming back from this pivot right here. 3 lower lows in accordance with 3 higher lows in the RSI. Nobody likes to hear about that stuff. Nobody likes to hear about bullish and bearish divergence. They just want to hear about triangles and head and shoulders formation. So I guess I'll do some of that right now. Still the measure move on this, what appears to be a bit of a double head, double shoulder, head and shoulders, however you want to draw it. But the measure move off of something like this is actually a bit deeper from the peak to the neckline there. That does give you a bit deeper target all the way down to 23,000. As long as we are pretty much below, below this wick at 27.6, I'm going to remain bearish. And perhaps we just get another lower high in the RSI, which, to be fair, would be, let's see, is it ready yet? No, we have 1 drive of bearish divergence, higher high there, and a lower high here. So that did line up. Volatility is low, and volatility expansion on either the daily time frame is probably going to get it at this point. The 3-day time frame, which we have been talking about, expansion above this level. If you see something like that, which we did see on the 4-hour, was it yesterday, a couple days ago? Nope. But I did want to bring our attention to a pretty good setup, which is when BBWP is below 25%, which we had right here, and we are coming into the green 55. This is a perfect short setup if you ask me. Well, if you're late to the party on this one, you would enter right there. Typically, you want to enter right on the green 55 with a stop loss above the prior wick. And you would typically target a move based on the bearish divergence, which we do have. Yes, 1, 2, 3, 4. That would be your 5th drive, continuation drive, which at a minimum, I think would get you to the bottom side of the range at 26,133. But more conservative target would be that a more aggressive target would be the 1618 at 25,744. Weekend price action. And here's how I would kind of invalidate that. I would say actually with any kind of a 4-hour closure back above 27,000, probably good enough for me. But if we take a look at the actual percentage gain, that would be a 4% move on the 4-hour time frame. And you can see this was another very good setup right here as BBWP. Was it below? That little sign is getting in the way. So were we below 25? No, not quite. So that wouldn't have been it, but you can see selling after being away from the green 55 for some time on a silver cross to the downside typically does get you some pretty good results, as you can see here, here, and here, and here. Just taking a look at some of the results here. That was a 8% move. This was let's say from the green 55. Let's be fair there. That was a 3% move, 3% move, probably a 2% move. And this one right here was a 4% move. So 4% would be right in line with that 1618 fib. And I do believe a lot of stop losses are going to be hanging out right below this level, as they were on the hourly time frame today. By just ticking above there, what you could see, the stop losses were activated. Bitcoin just rocketed back to the moon. If you do see something like this start to happen, which is it happened on the hourly, where the 9 crosses the 21 back up, and then we kind of get smashed between them, and then we're grinding up against that green 55. Well, that'll be another good indicator that this 4-hour bearish divergence play or silver cross play is not going to work out. So again, silver 9 crosses the 21. If price action just kind of ping pongs along in this area a couple times and then we break it, that's probably going to be a good warning that we're going to head all the way up to the top side of the range, which is currently going to be a possibility as long as, we have those drives of bullish divergence. On the other side, we have the bearish divergence, which will confirm with any kind of a closure back below this pivot here at, so tight little range here, back, a closure above or below this region right here. Probably going to get the next greater move on Bitcoin. And again, the daily time frame volatility expansion there is going to rule the market. And we did flip momentum back to the upside today, as it was crossed down yesterday night. You can see the Stokes uncrossed themselves. Will cross back down today below 26,500. The 2-day time frame, which is closing tonight as well, will cross back up above 26,851. So it's got $100 to move there. And the 3-day, which isn't closing today, will cross up above 26,649. That's going to be in another day and 2 hours. The 4-day, so 4-day is still down. The 5-day is still down. And the higher term timeframes do rule the market. So you get expansion off of this one and the direction of the stochastic, that should get a pretty decent sized move as well, either to the upside or to the downside. I think the 5-day volatility play can net you like somewhere between 30 and 40%. Where would that be? Well, to the upside, 30% would take us up to 35,000. 30% to the downside would be catastrophic for, I think, Bitcoin. But you could get a wick down there, right? There's a low liquidity right now, so big volatile move is up. We're going to see a absolutely big move incoming, and still goosing the odds in the favor of the bears. The only thing that has me questioning this is the NASDAQ. Bitcoin does whatever NASDAQ does. It's a higher beta tech stock. So that's contradictory. And the dollar is playing contradictory. So one thing to note also is it looks like the dollar could be kind of topping out here. Probably has one more push higher. I don't know. It could have a few more pushes. Hard to call the top on anything, but it's just been slow and steady grinding upwards and onwards here. Got another 45 minutes on this 4-hour candle, and we'll flip back up. After you leave the critical zone, you can see you can get a pretty nice downside move. We've been attacking the 21 for quite some time, have not been able to break it. Maybe it's time to come back and test that green 55. But as long as we are closing, above that region, pretty much it's going to be onwards and upwards for the dollar. I think that's it for today, guys. I'm going to wrap it up with that. I hope you enjoyed. I will be back on Monday bringing you more crypto TA. And with that, I hope you have a blessed and highly favored day. I'm going to sign out and enjoy your weekend. Take care.